Very good afternoon, everybody. Thank you for coming along here to the Property Investor Show at the Excel London, which is great to see you. Thanks for joining us here. Now, you'll see up here on the slide on the screen 5 faces, and 4 of them aren't here. So, in which case, let's start with the easy one. So, John Howard, would you like to say a quick hello, John?
Hi, John Howard, for the ones who weren't here in the last seminar I've just finished, which is the same room. I've been a property developer investor 40 years, bought and sold over 4,000 properties, and I've just started a joint venture fund where I invest in other people's deals from first developers onwards, and we support them, help them along the way.
Thank you very much, John. And just to introduce myself, it was going to be somebody else, then it was going to be Matt. Matt's not feeling very well. Mike Bristow, who's CEO and my boss at CrowdProperty, his flight has been delayed from Copenhagen, so he won't be here.
So he says.
But he's my boss and he pays my wage, so what he says goes.
Definitely true.
Absolutely. So, I'm Rupert Lowe. I'm Business Development Manager at CrowdProperty. I joined them in January this year. But I've been asked just to step in and to host and ask the questions. We're going to be talking today about money. We're talking about the SME property development market and SME property finance options. So we've heard from John. One thing he didn't mention, if you watch Property Elevator on Sky 191 between 8 o'clock and 9 p.m. on Thursday evenings, you will see John there as an angel investor. He heads up a panel of 5 people. Really worth watching. If you don't have Sky, catch up on it on YouTube. Really good. It's a investor-style program where people come in and they pitch to 5 angel investors looking for their investment in their property projects. So that's well worth looking out for. We'll move on to John Phillips, who's the Managing Director of Kingswood Associates. John has over 20 years of experience in the financial sector. And John, do you just want to say a quick hello?
Yes, good afternoon, everybody. I've run Kingswood Associates for about 25 years now. We're a small team of 8, a boutique finance brokerage. I'm an investor and a developer myself. Our loan sizes range from 100,000. Largest loan we did last year was just over 88 million. So there's the whole spread of things across the residential and the commercial sectors. So we blend senior debt, mezzanine debt, equity investors to help the clients get the best finance that we can. And we're usually quirky deals and familiar with most twists and turns. So happy to listen to your questions when you get the chance.
Fabulous. Thank you very much, John. And we'll move on to Mike's stand-in, so to speak, Damon Walford. Damon is a relatively...
Much better looking than younger.
Yeah? I'm actually older.
You know what?
Oh, yeah? Good
God.
Mike's one of the youngest people in the business. I wish I was his age as well, but never mind. But Damon relatively recently joined us as Chief Commercial Officer at CrowdProperty. He has over 25 years of banking and finance experience. And if you'd like to just say a quick hello, Damon.
Hey, good afternoon, everyone. Yeah, I'm Damon. I like to describe myself as a banker who managed to escape. So I've worked for HSBC, RBS, Aldermore, and then recently a business called ThinkCats, which basically took lots of institutional money and lent it to businesses in the UK. I've been with CrowdProperty a couple of weeks, and the reason I joined it is it's a bloody good place to work. And I really, really enjoy it, working with experts who understand what property development's all about.
Fabulous. Thank you very much indeed, Damon. So today we've got about an hour. If we're a bit less, fine. If we're a bit over, I'm not sure whether we'll get thrown out, but let's see how we go. Hopefully we'll get to a question and answer. If not, the guys are going to be around. They're going to be on the floor. We've each got our own stand downstairs in the main hall, so please just come along and say hello and ask any questions if we do run out of time. Nothing too crazy. Just going to talk money. Money makes the world go round, as we say. So let's get some expert opinions as to some general questions. And if I can start off with you, John Howard, what types of finance have you used in the past? You're a property investor. What's worked? What hasn't worked? And what do you see in the future?
How long have you got?
Well, about 40 minutes.
Okay. Well,
Do we need a stopwatch?
No, we're okay. So, of course, over 40 years, the banking world has changed completely. I used to know my bank manager. You'd go and see them, and they would lend you 50 or 60% loan to value, and that would be it. And then when you came to do the construction, you'd need to put in 50% of the cost for that as well. So, everything has changed dramatically. There's little point, and we've got far more experts on the panel than me when it comes to finance, I can assure you today. There's little point in going to a clearing bank, in my opinion, and I don't know how you both feel, to try and borrow money for property. It's a total waste of time. I do borrow a little bit of money from one or two. The clearest coots lend me some, but at, 50%, takes forever, 3 months to get the money, and it's all painful, to be honest with you, where, someone like CrowdProperty and so on, much quicker. They're geared to do it. In my experience now, most clearing banks say they will lend on property, but don't really want to. If you're an existing client, you've got a chance. If you're not an existing client, forget it. You've got absolutely no bloody chance at all. It has changed dramatically, and it changed for me even more so. I've survived 3 property recessions, but the last one in 2009, after that, all these new property banks started coming up, and thank God they did, because they're quick, they lend very quickly, and they now lend all the build costs. So you may well be able to get 70% loan to value, and if you haven't got the 30%, the reason I started my joint venture fund is we will invest the 30% and share the profit with you. But they will also do all the build costs, these banks, a lot of them will. So that makes a lot of difference. So that's how I believe it's changed, really, Rupert. So but the other 2 guys know far more about this than I do.
Thank you very much, John. And just whilst you've got the mic, you've got some books in front of you, and in case we run out of time, is something you'd like to say about those?
Well, I'm just going to give them away at the end.
Okay, no problem.
Whoever's actually behaved themselves.
And still here.
So I made a mistake in the last seminar because I gave them away too early. So I'm going to wait this time.
Excellent. You have to earn your rewards. No problem at all.
Just 4 books I've written, yeah.
Fabulous. Yeah. Great. Thank you. Moving on to John Phillips, product changes. You're in the broker side of the business. You're an expert on that, and over 25 years. How have you seen the products changing over your career to date? What's the most popular? What has been the most popular? What would you like to see? What can be improved upon?
I think it's interesting. I think the most popular was probably 90% loan to value at 1% over base. Just before the credit crunch, and that's why there was a credit crunch, because there was that type of lending. So it's very much gone through cycles where the lenders have become very cautious after a recession, and then, as John Howard was saying, people come in, so there's more competition. Yeah. When competition comes in, loan to value goes up, interest rates come down to the extent then that it becomes a very much more competitive market. So as John was saying, you can get 70, sometimes 80 or 90% of your purchase price and 100% of your build costs, subject to where you end up at the end of the project. So 70, 75% of the end of the project, depending on how long that project will take. And so lenders have ebbed and flowed. Some lenders like the hotel sector 1 month, they don't like it the next month. They like the residential sector 1 month, they don't like it the next month, etc. So, and it's all about knowing for you personally, your particular project in the particular location with the particular financials, who is the best lender on that day in terms of rate, loan to value, contribution, and also who will work with you if you start getting it wrong. So the lenders who consistently get it right will continue to get it right, because they employ good people who understand the whole property development cycle. So we've seen lenders come and go, but the good ones usually stay around. So.
Brilliant. Thank you very much indeed, John. And we certainly at CrowdProperty, we use brokers a lot because of what they can bring and the value add they bring to their clients when they're talking to us. Moving on to Damon, what are the most important factors a developer should take into account when looking to raise finance?
I think, John, you've touched on it. A lot of people talk about rates, LTVs, and that kind of stuff. And I think if you're a relatively new developer, you probably think that is relatively important. I think when we talk to developers who've worked with us, the ones that have done 1, 2, 3, or 4 developments actually say that is important. And obviously, you've got to be competitive on rate and those kind of things. But it's actually probably 3 or 4 things that are important. I think firstly is having access to expertise, so that you can speak to people who understand property. I think is really, really important. Transparency around fees.
Yep.
Definitely important. Ease, so it's got to be quite easy to do uncertainty, the things that really matter, so that you have certainty, you can go out and negotiate with your vendors and move the project forward. And I think, as somebody who has worked for a high street bank, they don't think about speeds, they don't think about certainty, they don't think about transparency, they don't think about any of those things.
That makes sense now.
They think about their holidays, I think.
Well, they think about their holidays and not getting made redundant from taking too much risk, I think, or sacked. So I think it's those things that matter more. And we've got some evidence that shows that the people that are really, really successful recognise the amount of time they spend faffing around looking for finance. And if you get the right partner, I think it...
Damon, I totally agree with that. It's okay haggling over 1%, but actually, if it means you're never going to do the deal or it's going to be slower, at the end of the day, if the deal's good enough, then you can afford to pay what most banks are willing to want to charge.
And it's also how they're going to behave when things go wrong.
Yeah, I agree.
So if you're sat in a bank and you have these things called risk-weighted assets and you've got a development that starts going a bit south, and they all go south at some point, there's always a bump in the road. I think having the ability to talk to somebody, pick up the phone is really, really important. And if you're a small developer, or first-time developer, who are you going to speak to in the bank? The business bank manager in a call centre?
You can't get hold of anyone.
No, that's true. It's just very interesting that when you say something about talking to people when it starts to go wrong and the sort of negotiation on the rate, people will, John is exactly right, they'll hammer and complain about 0.5% or 1%. And when you actually work it out, even if it's a larger scheme, the difference over a year might be 50 grand.
Yeah.
That sounds a lot. But then I'll say, well, how much are you going to sell these units for? And they'll go, $1.5 million, 2 million. And in that one statement is a difference of 500,000. But they're haggling over at this end and sometimes missing out on deals over that 50,000.
At the end of the day, property is a big ticket item, and no one is blasé about £50,000 because we put £50,000 on the table. I'm going to be the first to get it because I'm closest. Right, so
I'm going to cut your hand off.
But he's a banker, so he definitely will cut your hand off. Ex-banker. So. But in the scheme of things, you've got to look at the big picture with property developing. And speed is so important because if you can cut the development time by 3 months, you've probably saved half the 50,000 anyway.
All we talk about in the office at CrowdProperty, and I have only been there, a couple of months, but it's relentlessly trying to get people with decisions in principle as quickly as we possibly can, making sure they've got access to the team that we have, and having worked in a bank, you can't do that. No. It's too much red tape, and it's just about getting rid of the red tape and focusing on what's important to you when you're trying to negotiate.
You've seen the light, haven't you, Damon?
I've seen the light. I left banking in 2015.
Fantastic. Thank you, gentlemen.
Just so you all know.
Some over to the right side.
And it's good to have them there. General questions which we'll come to each of you in turn, if that's okay. Starting with John Phillips. Who are the key players in the market at the moment?
Kingswood Associates, of course.
Well, in terms of the brokering, but in terms of the lending, who are you steering people towards? Do you have go-to people?
Every broker has, without wishing to duck the question, because I will give names, every broker has their own favoured panel. If you think about property development as a rainbow, what you need is enough lenders that cover every colour of the rainbow. And you will, and there's always, so it's like a Venn diagram, if you remember those from school, where this lender will do that much, that lender will do this much, which overlaps with the other lender. So there are always a good number of lenders in any one space to choose from. And as the gentleman was saying, it's all about who delivers and who delivers also when things aren't going so well. And each lender and each broker have their own special relationships. So some of the lenders that we work a lot with are Together. For example, we work together with Hampshire Trust a lot.
Never heard of them, have you, Damon?
Never heard of these two. Signature Finance, we find are excellent. We used to work with Damon's old place, Think Cats, a lot. And there are, but that's one of probably, if you looked at our book of last year, we wrote about 120 loans. There would be 30 or 40 lenders in there. And it all depends on who is best that day for that particular property that you also trust. If there was another broker on this panel talking to you in a slightly less husky voice, a slightly Welsh accent, they might have an entirely different 30 or 40 lenders, just because that's the people that they've developed their relationships with. But the good guys, the big guys, they have the pockets, they're solid, they're reliable, and crucially they employ good people that will help you through those tough times.
Fabulous, thank you very much indeed. And John and Damon, do you have anything to add on that as to the lenders who you're seeing prevalent in the market? Damon, I know your answer, but perhaps we'll go to John first.
What I would say is to try not to have all your eggs in one basket, because if a bank do get into difficulty, and of course until 2008 we never thought any bank could ever get into difficulty. They're like what we call blue chip. But of course since then some have. So I wouldn't put everything in one basket. So if you're doing a number of developments, I would try and spread the risk across a few ones. But I mean, you can have your favourite and have a number in one of them. And CrowdProperty have got a great reputation, by the way, not just because you're sitting there, just because you're becoming our partner bank for our joint venture fund. I hate to be biased, but there's a reason why we've picked you and you've picked us, hopefully. And at the end of the day, that's what it's about. The other thing I would be very careful about is if the rate's too cheap. Because if the rate's too cheap, that could be a sign that the bank are in trouble. I've just done a development, I've just bought a part finished development after auction. They didn't sell it at the auction in Birmingham. And the bank went bankrupt. And the developer went bankrupt. And fortunately for us, I'm quite pleased those two things happened. I know I sound horrible, but it's a business for me, and I have to earn money. And we picked it up because of that fact, because the bank clearly weren't good enough, which got the developer into trouble, which means we've bought it for the right money, hopefully.
Anything to add, Damon, or shall I move on?
No, I would just like to add that, since 2008, what's happened is there's been lots of innovation in this market, lots of new entrants, and a lot of the people that did work in banks who have got anything about them have got out and started to work for different businesses. So the people at Together, the people at some of the names you talk about, Shawbrook and Alderman, people like that, Challenger banks, they basically took talent from the high street banks and given them the opportunity to shine and lend money, really.
It's interesting. When I started using Shawbrook, they had 65 staff, and you'd be dealing with the director, and they actually knew your name, which is great. Now there's 1,650 staff. They don't know who the hell we are, and we're paying the same rate as everyone else who's just started their property journey, which annoys me because I think that's wrong.
Yeah, and the big bank and the challenger banks become more like the big banks.
Yeah.
And that's what's going to happen. So I think there's lots of room for competition, but I like to take this whole thing around technology as well.
Yes.
Giving people access to finance so they can get really, really quick decisions. Doesn't mean you're going to get the money, instantaneously, but we can make very, very quick judgments on whether or not it's a deal we want to back. I think that's quite important.
Just say yes when I ring. Yeah.
I was just sort of add to that point that John made very cleverly. With if the rates are low, be careful, because a lot of the lesser well-known names are backed. Basically, lenders borrow money themselves and lend it out to you.
Yeah.
The clearing banks obviously take in your savings, give you 0.00%, and lend it out. Other lenders borrow from an institution and lend it out. So they're under pressure to lend. And when they're under pressure to lend, they will start backing schemes that they really shouldn't back, at rates they shouldn't back, and at loan-to-values that they shouldn't back. And that can get the bank into trouble, which means their good people will leave, or as John was saying, the bank itself could fail. So tried and trusted institutions with good people are usually a very safe place to, because whilst you're borrowing their money, and it's their problem if you can't pay it back, it is also a problem for you if you can't pay.
Big problem.
Yeah, and as witnessed the Birmingham scheme you've just picked up.
Yeah, absolutely.
Yeah, absolutely.
Thank you, gentlemen. It's very important to do your own due diligence on everything you're doing in property, including your lender. I think there's the message there.
Definitely.
Moving on, barriers to finance. I know we've touched on a few bits and pieces already, but for example, what is the key barrier to finance, particularly for maybe new starters, loan to values, fees, rates, experience? All these things come into to people starting out, as John, as you say, on their property journey. Perhaps if I may start with your good self. Me. Please. Yeah,
I think that the biggest barrier seems to be, and what we've learnt over the last 9 months of starting a joint venture fund, is if they're first-time developers. Be very interesting to see and hear what the two guys say about that, because what we're finding is people are coming to us because we help oversee the project, and of course, CrowdProperty and other banks are pleased to see us because we've got that 40 years experience. So I think that almost is a bit of a guarantee, and if it starts to go wrong, we know we've had things go wrong. If you talk to any property developer with any length of service, if you like, they all tell you they've had a problem, they've had a development that hasn't gone right, and anyone who tells the bank they haven't, who's been at it a long time, is a liar, and the banks know that. So always be honest with the bank you're dealing with, or the broker you're dealing with. Always be honest. Tell them everything. They're going to find out anyway. You might not find out if you've got a mistress or a lover or something, but apart from that, they're going to find out, I promise you. So tell them everything to start with, and then they can place the business correctly for you.
And John Phillips, please.
So on the list that you gave us was pretty comprehensive, but first-time developers are the people who struggle the most, and it's that classic catch-22 conundrum.
Yeah.
Well, how do I get experience if I can't get experience?
Yeah.
And so what we say, I was very interested, I'll speak to you after about your own fund, because we've brought quite a few, we've written 30 or so equity checks over the last 5 or so years, where the project has been right, and they might have been highly experienced contractors, for example, or highly experienced buy-to-let landlords, just never done a specific development. And we've had high net worth individuals will come in and help there. Yeah. But what the lender likes to see is crucially, who are your team? Yes, I painted my grandmother's house once.
Power team, they call it, don't they? Some people.
Exactly. And if you painted your grandmother's house, well done, but it doesn't mean you can build 700 student units.
No.
But if you hire an architect who day in, day out builds 700 units, who knows the tier 1, tier 2 contractors, etc., and you basically empower them to deliver the scheme for you, then yes, lenders will start to take you more seriously. If you skimp on your team, my brother's halfway through his architecture degree, can I use him?
No, you can't.
No. Lenders like to see solidity, stability, and the experience, even if it's not in you personally, the experience is somewhere in your team.
Yeah.
Excellent, thank you. Damon?
No, well, I just wrote team and underlined it a few times because ultimately we fund first-time developers, and I think it's all down to the team. And I've seen that play out in meetings we've had where we've sat there and the person's come up and said, "Oh, I've never done this before," and then he's walked in with, "This is my architect, this is my planner, this is my..." And we're like, "Well, bloody hell, where can we sign? Where can we get the money to?" Because
and would you agree that you're lending to the person? I mean, on the Property Elevator show, which you very kindly plugged, thank you so much for that. I forgot to mention, I'll get in all sorts of trouble for not mentioning it. But, when we're on that show, we're looking at the person. We're saying, look, do I like the person for a start? Could I work with them? Because there's some people who might be, very, very pleasant, but it doesn't mean you're going to be able to work with them on a business level. So we look at the property, the person as much as the property. Would you say that's true, guys?
I think that the person's really, really important. The integrity of the person, the ability to manage things when they start going wrong, the ability to kind of like deal with the different elements of the team as well and manage the team, if you think about it, is really, really important. Because if you have a contractor walk off site because the guy who's developing is not a very nice person, for want of a better phrase, then it's not going to work for anybody. So I think the team is really, really important. Then the other thing is important is kind of sometimes think about the funder and how a funder thinks about things in terms of how they look at things. So if things get delayed, if prices are overruns, raw material issues and things like that, as long as you can articulate that, people who do finance tend to understand those metrics quite well. And as long as you're open with those things.
Especially if they're a property bank.
Correct.
And that's the key here, I think.
So the list basically is sort of who's borrowing, what are they borrowing for, where is it, and how much. But the first one is who. Because the credibility of that.
Yes.
Of that
and I said, if you had a problem in the past, it doesn't necessarily mean people won't lend to you, but be honest, because there's nothing worse than finding out right at the end there's found something out about someone that might not be a problem, but because you haven't told them, it now is a problem because they lose confidence in you.
And interesting, if you have had a problem but you dealt with it,
that
actually a bit like if you work out in the gym, your muscles get bigger because you rip them and then they grow back bigger. That's how muscles grow. So if you've had a problem and you fixed it, lenders will like to.
Bit late now.
That's where I'm going wrong.
Bit late now. I didn't know that. Thanks. Someone should have told me sooner.
Every day's a school day, right?
Yeah, every day's a school day, definitely.
But they will appreciate that. We had a highly experienced developer built up an £80 million portfolio. Lost it all during the credit crunch. The bank made a bit of a poster child out of him, as did the press. And then he's doing one recently in South London. Everything was perfect, 60 units is great. Right through the middle of the site was a Thames main sewer because the lawyers, it was on the plans incorrectly. Yeah. So it cost them about £750,000 to move. But the lender stayed with him because they knew that he'd been in a position before to fix things.
Yeah.
and so they backed him all the way through. So actually be honest about the troubles and the challenges you've had and how you've overcome them, because that can show the experiences that you've gained.
I think the only thing I'd add to that is that, you know, when you first start banking, and I started banking in the early 90s, and they used to encourage you to go out and see customers a lot. And I used to spend a lot of my time. I did a lot of work in the West Midlands, in the Black Country, with steel manufacturers.
In the pub, ladies and gentlemen.
No, in the pub. It wasn't that. It wasn't only on Friday. But I used to spend a lot of my time walking around sites. And actually, the first thing that happened when I joined CrowdProperty was they gave me a hard hat and a high vis jacket. And we, you know, are the people you're dealing with willing to come on site, kick the tyres, talk to you about your development, have a look around?
Sometimes we don't want you on site, to be fair. The one thing I would say, the telltale signs of a development going wrong very early on: skip's not emptied, kitchen's not arriving on time, you know, late payments, you know, all those things are triggers that these guys are straight on. So if you have a banker coming on site, make sure the skip is empty. That's the one thing they pick up. Oh, the skip's full. Yeah, well, because they're working. But get it empty the day before. Bit of a tip there.
Yeah. And an interesting thing, just to sort of a little bit of a plug for brokers really as a whole.
Thought they might be.
Funny enough, is lenders can say things to brokers that they can't really say things to clients direct. And the client can say things to a broker that they can't say to the lender direct. So we, brokers as a rule, can sit outside that communication, that direct communication.
It's a really good point.
And basically keep the relationship alive by back channeling information that can't be seen in the official email trail. Yes. And it is very, very useful. So if you have a broker that is experienced in the development finance field, that's what a part of what you should be asking them. Can they do that? Do they have those relationships to do that? That was key.
I think that release valve is really important. Really important, because it's a fresh pair of eyes as well, right?
Yeah, absolutely.
Really important.
Fabulous, thank you very much indeed. And we've expanded a bit on the next couple of questions I was going to ask in terms of... which is brilliant. It's better to hear you guys talking, because one question always leads, or a comment leads to another one, and that's the most important thing. And people actually talking about real life experiences, which is, hopefully resonates with everybody in the room. But is there any particular advice you would give to a new starter in property, or what you know now that you wish that you knew when you started out on your career? Is there anything that is big flash of light, thinking, oh, I wish I knew that now?
Marry someone rich.
There's advice for you. But if there's nothing else, I think we've covered quite a lot of that. But if we move on to, now here's a question which I think will be hopefully quite interesting. And I'm just looking for the panel's general views about personal guarantees. How I knew that would get that reaction. And how they were around, and then did they stop being around, and now are they back again? And do you avoid them? Are they good? Are they good for a developer, a lender, both sides? Is it a hindrance? John, fill your boots.
Okay, so in 2008, I was feeling rather smug because I had quite a lot of borrowings, quite a lot of property, no personal guarantees at all. I thought I'd arrived for the third time, having survived, second time, having survived 2 recessions and got over them and be worth less at the end of them, but still dealing. And by the way, always, when someone says to you, "Are you buying at the moment?" You're always buying. The door is always open. Doesn't matter if you haven't got any money, because I tell you what, if the deal's good enough, you'll find the money. Somebody will back you, okay? And in 2008, I had no borrowings at all. By 2009, I had borrowings. I had a lot of borrowings, but I didn't have any personal guarantees. By early 2009, suddenly I had about £7 million worth of personal guarantees. And the reason for that was the bank ring you up. No offence, because you were clear at the time, weren't you?
Yes.
So the bank rings up and says, "Oh, hi John. Yeah, you're 60% loan to value. Yeah, it's now 80% loan to value." I said, "Is it? Why is that?" "Oh, the market's dropped 20%. Well, first of all, it's a micro market, so every area is different. So they said, "Well, what we're going to do, we're going to revalue all your stock, and that will cost you 140,000 with the valuer. We'll take it out of your account." I said, "Well, that's going to help, isn't it?" And then after that, that's what we're going to do. So they valued everything, and I've got quite a nice block of flats, a couple of blocks of flats in Brighton. And in Brighton, the market didn't go down in 2009 at all in the recession. So they rang up and said, "Well, it must be fraud." I said, why is that then? Well, because we've had the block in Brighton valued and it hasn't gone down. I said, well, no, Brighton's, it's a good area. We hadn't had it valued for 3 years either, which helps, of course. So they said, well, it's fraud. So we're going to get it revalued and you're paying for it again. So I said, okay, well, I've got no choice, have I? So they got it valued again. It came up the same value. So they said, oh, well, it doesn't matter anyway because we want the money back in 6 months. So we were lucky that we weren't overgeared and we could find another bank to work with us. But that's what banks can do. Clearers especially, they're like sheep. So once things start going wrong, they lend. Then things start going wrong, they're all out of it. Like they all want to either improve their position financially. You've gone over the banking mandate is the bullshit they give you. Oh, and by the way, because you've gone over the banking mandate, we're now putting a load of fees on top as well. Yeah? So when you look at an offer, always look at 2 things. One, how long the offer is for. And if you think you're going to take 12 months to do a job, borrow the money over 18 months. Because after 12 months, CrowdProperty don't do this, but over 12 months, a lot of banks will then say, oh, yeah, we'll lend you the extra 6 months. Well, of course they will, because they haven't got to go and lend it to someone else. And they'll charge you more interest and they'll charge you more fees. So always borrow the money over a longer period than you need. Very, very important. What was the other thing I was going to say? I've said enough anyway, probably. Mr. Angry.
No problem.
On PGs, it is a very circular question, PGs, from which, and we understand it from both the clients, obviously, and the lenders, as everybody does, the clients and the lenders' point of view. And it's, you don't need a PG, this project is so safe. So the lender says, well, if it's so safe, give a PG. And that's the circular question that you constantly get. So one of our lenders that we like has a phrase that we like. So we want a PG from you, maybe for the cost overruns, maybe 10%, maybe a nominal amount, just to keep you honest at the end. Because there's a massive psychological difference between having to write another check for a lot of money to keep a development live and just handing back in the keys. Yeah. And you might say...
Skin in the game. Skin in the game.
Yeah, exactly. And they might have put skin in the game at the beginning, which counts. Absolutely, it counts. It can be a huge amount of money. But having to write another check is a real psychological reason to stay involved and to fix any problems that are there. And most problems are fixable. You just have to work with the lender and, and make sure that everybody gets out with their... And, lenders just want their money back. Ultimately at the end of the day, and if they need, it's a way of keeping them honest. So the best we see, some lenders are no PGs, and that's fantastic. But as a rule,
is that unusual though? I mean,
it is. It's not the norm now. No. It's not the norm. But say 10%.
If so, just let me know who they are.
Yeah, indeed. We'll chat after. 10% of the loan size, which is after you've put your own deposit, it stops you running away, stops you giving up. Yeah. Basically, and keeps you coming to the office for a conversation on the problem rather than just walking away from it.
I can't wait to hear Damien's answer to this. This will be interesting.
I was just going to say that, to be honest with you.
Yeah.
I think.
What about 2009? What are you going to say about that?
You can't blame me for that.
Well, you were a clearer at the time.
I was a clearer at the time, and I did used to sit on some committees that did treat people pretty badly, actually. You sit there with your head in your hands going, we've lent this money and now you're going to want to renegotiate it the last time when anyone needs it. And I think that's true, and I think if you think about the way banks think now, they have this thing called risk-weighted assets. So if you're lending, let's say, to a trading business and you lend them £1 million, you typically have to put like £100,000 to £120,000 to one side in case it goes wrong. So who's going to want to lend money if you've got to do that? Because it wipes out all the profit of the deal. And it's really, really hard. They have these little sliders they move across that shows them how many risk-weighted assets they've got to keep. And it's really, really scary. I think on the PG thing, I've always thought that PGs do exactly what you say. Yeah. And actually can protect people in the long run because it keeps you honest. It does keep you at the negotiating table. It keeps you focused on what really matters at that moment in time. But I also think you need to be really, really careful about, taking independent legal advice and all those other things because it can impact on you personally. There's a clue in the title.
20% seems to be 20% of the build costs seem to be the
10 to 20.
Yeah, it seems, and that's relatively fair to be fair.
And I think, by the way, I'm sure this is a very obvious point to everybody in the room. But if you borrow in your personal name rather than through a limited company, even if for whatever your personal reasons are, it's more tax efficient, you're at 100% PG. Because that's 100% personal loan. And sometimes people forget that, so I just want to say that.
In the ideal world, SPV, I'm sitting with our joint venture partners, we say set up a SPV, special, just for that project, and we invest into that limited company.
A specific project,
Yeah.
specific limited company for a specific project. You can brand them all. You might go to sales. I'm just looking at the fire exit. Right? Brand it your fire exit holdings or something. It doesn't matter.
Fire Exit,
It's
Excel
probably not
Limited, Fire Exit.
Probably not the best one, but whatever
Spillers,
your brand is,
whatever. Yeah.
you can call your development anything, but just have a separate limited company for each one.
And you're happy with that, aren't you?
Yeah, absolutely.
So it's easier for you guys as well.
It's easier.
Isn't
Yeah.
it?
Brilliant. Thank you very much indeed, gents. So personal guarantees, you get two sides of the argument as to who wants one, who doesn't want one. Similarly so, when people talk to us about joint ventures, my own personal experience, I've been a property agent for over 27 years before joining CrowdProperty, so come across them a lot. We come across them a huge amount in the business at the moment. And my personal experience, I'm going to ask the panel what theirs is in terms of joint ventures, good or bad. I only hear about the ones that are bad. They're the only stories. You don't hear about the ones that are good. And are there plenty of ones that are good? John, you've got your business, which is all about joint ventures. May I start with your good self?
Yeah, sure. So I've been on the other side of joint ventures for many, many years. So my first backer, a gentleman called Robert Boyce, they're in the Holiday Property Bond now, very, very wealthy family, backed me, believed in me, backed me when I was 24 years old, having myself done a few smaller deals. And, you know, I mean, I'm speaking about good joint ventures at 2:20 in room 7, so hopefully you all come to listen to what I've got to say. And actually, that's how most people get on in the property world, because otherwise it's too slow. You know, you're doing one project at a time, on your own, probably with your own money and with the help of CrowdProperty and so on. You know, it's a very slow process. So if you can find a good joint venture partner, and there's a few tricks to it, when you talk to a joint venture partner who's putting the money in, do not tell them, please, that you want so much a month out of it before you make any profit. Because you know what? If anyone says that to us, turned off. It's just like having a first date and saying, I booked a hotel room for 11 o'clock tonight, you know. Even if you might get lucky, you don't go telling them that, do you? To start first, well, I can't remember now, but didn't used to. So what I'm saying is, you know, be sensible. Why is anyone going to, you know, invest in you, invest in the deal, if you say, well, yeah, I need £1,000 a month to live off from day one. Oh, yeah, I'm just going to keep giving you £1,000 every month. It doesn't happen. It won't happen. So you need to make sure that you're financially, you don't need that, because that will give your joint venture partner confidence. But I talk a lot more about it at 2:20, to be fair. So.
Okay, Damon, should we go to you next?
Well, I think it's fairly simple, isn't it, really? Just make sure you get the right partner, right?
It's a bit like marriage, isn't it, really?
It sounds like you've got to find the right partner, and if things go wrong, you know, make sure they're going to stand by
Well,
you.
interesting, one of my joint venture partners who I've worked with for 33 years is just retiring, and we've got a number of companies together, and it is a little bit like a divorce. It's an amicable divorce, but I tell you what, it's expensive to split things up and go separate ways. I've got a big tax bill. In fact, my tax bill, I don't want to bore you, but my tax bill this year is half the size of bloody Starbucks. So, you know, in the UK. So it's painful. So just remember that. Tax planning is also very important. We couldn't do much about it, but tax planning is very important.
From a joint venture point of view, we see both types. There's the joint venture where it's an actual 50-50, or, you know, percentage sort of split to be agreed, really, and that depends on, I mean, John would not only be bringing money to the table through his fund, but he'd be bringing expertise, and could be, as you mentioned earlier, could be the crucial part of that team jigsaw that you need to get the bank to back you, and that's a fantastic thing, and therefore his percentage is entirely deserved. The other side of a joint venture partner is very much a silent partner, who they're high net worths, and some of them actually just want an interest rate.
Yeah.
Now, an interest rate at outset looks very attractive as well. I won't be giving away, you know, 50-60% of my profits. I'll just be paying 15 or 20% a year on that slice. You know, for the 18 months, you know, I'll borrow 400,000 and I'll give them back 500,000. You know, it sounds a very good deal. But if things start taking time, if things start going wrong, especially if you're looking to amend planning, you know, I'll just go in. It's got planning for 10 houses. I'll go in and I'll change it to 20 houses. And 3 years later, you still haven't got that planning.
It will kill you.
Well, suddenly they're 20% a year, because it's not a share of profits. It's starting to look very, very expensive. And they can then say, oh, we're sick of this is just taking too long. So it's about negotiating the very best terms for yourselves, first and foremostly, but also you need the joint venture partner needs a reason to be interested, because if it's not profitable for them, they won't invest in the first place. And it's striking that balance, and also if you've got the experience on board, that's very much that's worth a few percent.
And understanding what motivates them, negotiating hard at the outset, I guess.
Absolutely.
Perfect. Thank you very much indeed. Tread carefully out there. I've sort of come to the end of the general questions. I think we had about 40 minutes in. We've run and hit that, but I think we're okay for another 5 or 10 minutes. I know, John, you've got another room. I've got one as well coming up soon. But are there any... Say again?
Is that hotel rooms, John?
No, it's not 11 o'clock. No, that's later.
That's
later.
That's early.
But are there any general questions anyone would like to ask at this moment in time? If there are, please just raise your hand. If not, we can move on. If anyone thinks of anything, just please do raise your hand and we can have a quick chat. But in the meantime, perhaps if we start from the far side, and John Phillips, do you just want to plug your business, your stand, and any rooms, any talks you're giving, or whether you're not, or whatever the case may be?
No, I have a hotel room at 11 a.m.
11 a.m.
11 p.m.
Early starter.
At 8 a.m. I go to the gym. But,
we can see that.
No, please come and join us. Come and say hello on the stands. We've got the classic collection of flyers and chocolates, to have a chat with people. But it's genuinely, these shows are great. We've missed them. All our work comes face to face. We're not an online brokerage. We don't generate business through online emails and such like. It's all about meeting people face to face and use them as the reason that brokers, lenders, and experts are taking stands is to answer all of your questions, to help you on the journey. And whether you use us, you use another brokerage, you go direct to lender, is fine with us, because at some stage you might need us. And the more people who are expert in the sector, the better the sector is. And so please just come and ask any questions that you have, and we will try and help.
Brilliant. Damon, you've only just arrived. Do you know what stand we're on?
No, I did get the panic call. Can you come and do this?
Absolutely. So
I live in Worcester, so I didn't do bad getting it.
No, you've done very well. So I didn't expect you to know, but CrowdProperty on 412.
I did.
So
I did find you.
You did indeed.
I'm not stupid.
Logoed all over the place, but it's 412.
He's no longer a banker. He's fine now. He's recovered.
Absolutely. He's turned the corner, no question whatsoever, and it's great to have him on board. Well, come and have a chat with us. Lots of stress balls, and you can throw them around. You'll see them picking around all over the show, probably at the end of today and tomorrow. Damon, were you going to add anything there?
I was just going to say, at the end of the day, businesses like CrowdProperty, and the thing I really like about this business is the fact that we have like a team of 17 qualified surveyors and town planners working with us who are there to help you, right? They're there to hold your hand throughout the development.
Amazing. Yeah.
And you can call on them, and the expertise in the business is phenomenal. We go into the office, we're there 3 or 4 days a week, so we're all working together.
Not wearing ties though, are you? I noticed.
Not wearing ties. No, not quite.
Not like that. No.
No. Even not today. I've noticed. But anyway, go on, carry on. So.
I did iron my shirt though.
Yeah, you did.
The 6 o'clock this morning. So that's a good effort. It's a good effort. But I think it's those kind of things. What I hear in the office is people ringing up with inquiries, people talking to them on the phone, and then if they don't know what's going, if they're not sure, they'll put up their hand and say, "Can somebody come and help me? What do you think of this development?" And those things happen in real time. Yeah. We get indicative terms out. Certainly within 24 hours. So
that's amazing service.
And that's all we focus on, really, is getting you that certainty that you need throughout it. Second thing I was going to say is that you talked about institutional money. If you look at what's happened to UK PLC, you look at all the government support that went out there last year in terms of COVID support, lots of C-bills, bounce-back loans, and all those kind of things. A lot of the trading business in the UK are swamped with debt, which means that institutions that are looking to deploy capital in the UK will look at property development as a very favourable sector now, particularly with asset classes, values going through the roof and stuff like that. So there'll be lots of money, lots of liquidity, so be really, really careful who you deal with and make sure you're dealing with people that can help you and hold your hand.
Yeah. And one thing, if I just add to that with UK PLC, one of the reasons I went into property, which came straight from university 30-odd years ago now, is that Britain is an island. An interesting question, do you know how much of the UK is actually tarmacked on or built on? Rough percentage, anybody? 15, 20%? It's less than 2% of the UK is actually built on. The rest is green. If you just do a Google map of Britain, it's pure green. And
we're talking about Wales here, or the rest of the country.
Well, there's lots of white. So maybe.
Were you going to crack a joke about sheep?
I was going to crack a joke about sheep. That's where the hotel rooms.
We knew that was coming.
Exactly. But basically, the the fact is that most of the properties are around the larger cities, of course, but also in small towns too. And because people don't like, everybody's a NIMBY. People don't like their own area being built on, so there's always a demand for property. There's always a shortage. We're the most welcoming, most popular country on earth to live for very good reason. Yeah. And it will continue to be so. So what you're going into, if you're already in it, or if you're just entering property for the first time, it's a very, very strong long-term career, long-term way of making wealth. There's no success that nearly half the Sunday Times rich list is through property. Yep. And there will always be upward pressure on prices because of the shortage of units and because of the lack of land. So you're in a good place, and just think of it as a long term. It's not a get rich quick scheme.
No, I think 10
years.
That's a very good point you've just made there. Very good point.
I mean, Rupert's got some really good slides on the kind of the need for housing stock in the UK, which we'll talk about later. But the reduction in housing stock production by SMEs in the UK has been significant over the last 10 years, and that's
hugely.
But you guys are the SMEs of the future, right?
Yeah.
So just get building.
Yeah.
Absolutely. Thank you, gents. And John?
So we're going on about small developers, and we're all called small developers unless we build, I think, 500 houses a year or something crazy. I went to an event with the housing minister, and it's very interesting. I can't remember which one because there's been 11 ministers in bloody 12 years, something bonkers. But anyway, and it's very interesting because the main 10 house builders in the UK, basically the big 10 they call them, are doing about 60% of the business. In 1970, all of us in this room, as developers, we're doing 70% of the build. So that's changed around dramatically. And the government are very, very keen, and anyone who knows me a little bit, I bang on about conservatism quite a lot, but the government are very, very keen to try and change that. The problem they have is that these 10 house builders, they have lobbyists, professional lobbyists in Westminster. And anyone who doesn't think that property and politics are linked together, they're very much linked together. And these big 10 are donating to the Conservative Party and the Labour Party to make sure they get their own way. And they don't want too much stock on the market at any one time. So this year we built, last year, 245,000 houses. They need to build 500,000. They make out they only need to build 300,000, but that's bullshit. They need to build 500 to keep up with any sort of demand. How did I get onto that? Sorry.
No problem. Carry on.
I've got to plug myself now.
You have got to plug yourself. Your
this
room and your...
I've got an agent, and my agent just despairs because I don't plug much. So, not much upsell, I'm afraid. So, listen, hopefully today's been very useful to you all. And I said, I'm talking about my joint ventures at 220 in room 7. Hopefully some of you can make that. I've got a stand, 200 and something. I'm not sure. It's at the back anyway, because all the people that paid a lot more money are at the front. I've noticed these guys here. But anyway, I'm promoting my joint ventures on my stand. My stand is all about joint ventures because it's my new sort of passion, if you like. But I also do some mentorship, not a lot because I'm very busy, and I also do some seminars. I've got seminars in November, the 20th and 21st in Dudley, which is a weekend. Haley Andrews, who's sitting here very quietly, very experienced developer herself. She's hosting it for me, so thank you for that. Two-day about advanced property developing, really. It's a 2-day job. I'm working at the weekends. And then in December, I've got 3 days at Supper House, St Albans, early December as well. So I don't do a lot of it, but if anyone's interested, please just go to one of my websites and you can book on there. We'll be delighted to see you at those events. Thank you.
Fabulous. Thank you very much indeed. Just the last couple of moments and comments from my good self, so to speak, is those of you who are new to property, everyone loves to chat in this industry. It's a people-friendly industry. Yep. Everyone wants to help each other. They won't give you away trade secrets where it's getting a bit competitive, but that's fair enough. But generally speaking, there are 3 stands here. There are loads out there. Come and talk to people, share your experiences, talk about your journey, what you're up to, and you'll find everyone very approachable and very friendly. A plug for myself. on Seminar Theatre 1, which as you go back into the main hall is in the far left-hand corner near our stand 412. If you can bear putting up with me again, I will be talking just after 3 o'clock about all things crowd property, and you can see me try to speak so quickly that I fit in a presentation I gave in Leeds on Tuesday evening. It took an hour and a quarter, and I've got 40 minutes. So Mike Bristow loves a slide, and he's given me 38 slides to hit. So yeah, that could be a challenge, but anyway, the point being, we're here, we're out there, come and talk to us. I'd like to say a massive thank you to John, and Damon. Thank you all very much indeed for coming along today. Have a good rest of the event.
Thank you.